Hello guys, this is a pre-market analysis of 29th of April. So we will have to look at the new developments between US and Iran, the deadlock, and then oil price have came above 110. That is again a critical risk. That's something which we need to discuss. And then RBI's new rule, which can impact the banks. Okay, so these are the main three things that we need to discuss. Banks are looking slightly weak because of this. So I'll be explaining the reason also. IT is looking neutral and banks are weak. So it may be again a consolidation. We may get a flat opening. If you look at GIFT Nifty, it's trading around 2400, 110 level. So if you are assuming that when 1 month is there, it's a new month which is starting. So maybe 120 is the premium. So yesterday we got a close of around 24,000. So that will be like a flat opening. Maybe because of liquidity aspect, 20 point here and there, that will be the difference. Otherwise, it is going to be a flat or 20-point gap up or 20-point gap down. Beyond that, nothing is going to happen. So let's look at the other developments and then what we can expect once the market open is what we need to see. Again, things are looking negative. Bank Nifty will be dragging. Oil prices there. So uncertainty is there. Again, if you get a bounce and if you see weakness, that is an opportunity like previous day high, important swing levels and Camarilla pivot levels, CPR levels. These are a very important level, or once you get retracement pulled back to VWAP or 20 MA, very important level. And these are the areas where you should be looking for trading. Don't just blindly follow any breakouts or breakdowns. It can trap you in this kind of situations. Okay. And if you would like to join our live market mentoring sessions, you can get in touch with us. You can trade with us and we will be learning and trading together. So we have the live market session now. Before we discuss, okay, so first thing that we need to discuss is, of course, related to war. So the core issue, if you see, right, it's Iran, want to completely stop the nuclear program. That's actually the demand of US, right? Completely stop the nuclear program and, completely open the Strait of Hormuz. So these are the key demands or main demands of US. But Iran's proposal is different. They are actually, deviating the nuclear issue and energy issue differently, or trying to handle that differently. So what Iran said is, we will reopen the Strait of Hormuz immediately, but condition is that US have to lift the naval blockade also completely. So it's not that Iran will open Strait of Hormuz, but US blockade will still be there. That scenario is not at all allowed. So Iran will open the Strait of Hormuz provided US also have to lift the naval blockade completely. And earlier, if you see, US want the nuclear deal first. But Iran now want energy issue first. So this is a major issue that need to be solved, and nuclear discussion, which will be done later. So you can very clearly see here, the oil supply crisis and nuclear issue are different, and it has to be dealt differently. It's not that first you discuss and make a settlement on nuclear issue and then remove the blockade or open the Strait of Hormuz. That's not the case. Oil supply crisis is the most important one at this point of time, and that's first, and then nuclear issue. So US response, of course, US is not happy. US, in fact, have imposed more sanctions on more Iranian companies and Iranian personnels also, and trying to impose that pressure. But at the same time, US did not rejected the proposal outrightly or completely have not rejected the proposal. So there is still a scope of negotiation. But of course, US is not happy, and that's why Trump have gone heavy with some more sanctions to pressurize Iran to come with a deal. Okay, so that's the situation, and Trump is claiming that Iran is completely collapsing and Iran is desperate for a deal, and all those comments are there. But the reality is that the situation now is again a deadlock. So the negotiations are still going on, and good thing is that what is positive is negotiation windows open, right? It is still going on. Now, one major risk that we need to discuss apart from this is oil price. That's not completely related to this war, but partially connected also. So UAE is exiting OPEC from May 1st. So see, what is the impact when fewer members are there? The control of oil price actually will come down. So more oil supply will also be there. So what we were expecting is the price will come down, right? But what actually happened is price is actually rising. And if you look at spot price of oil, it's around 111 per barrel. That's the seventh consecutive rise also. Brent crude, you can see it's 104. WTI is around 100. That is futures. So one thing is that spot price is 110 and futures is trading in a discount. So when futures is trading in a discount, what does that mean? When the price of future is lower than the spot. So now it is more. In future, it will be less. That's the expectation, and that's why premium is less for futures. So what is the expectation of the market? In future, the price will come down. So that's the expectation, and that is the reason why currently spot price is 110, but future price, if you see that the market is expecting price will come down. So future is trading with low premium or a negative premium or lesser than the spot. And this is something which is applicable everywhere. When you see Nifty spot is like, let's say 23,000 or 24,000 and future is trading at 23,950, 50 point less. What does that mean? The market going upside probability is actually very less. Market may come down before the expiry and you will look for a short position, right? So here the market is expecting, though now the spot price is high, but still it will come down in coming days. Okay. So yeah, coming to geopolitics, as I've discussed, geopolitics and oil, these are the ones which is deciding the market. So talks are still alive. You know, if the talks have rejected, market could have crashed, right? Because people might have connected this crude oil price increase with the geopolitical issue, but both are now looking different and distinct. Talks are actually going on, so don't want to worry about that. If you see some big fall, move in the, everything will be reflected in the chart, and accordingly you can take the position and be very careful with the news also, because it's a news driven market. Nothing else is important. Technicals are not important, but important levels where you get the quality trades. That's the situation now. If it is consolidation, once you understood that it is a consolidation, important levels will play. If you realize that it is based on news, some news is coming, then chase the rally. Otherwise, don't chase the rally. Just play for the levels, look for some scalping points and get out of it. Done your target of that particular day and then get out of it. US market also slightly weak yesterday. There was this OpenAI result. It is mixed. User growth is there. Revenue expectation is also matching. But the concern is, it may struggle to support the data center spending. I don't know much about this technical aspect. This is what I have read, so I just told you. But related to revenue and user growth, it matching the expectation. But this is a concern. So the impact on market is AI stocks and the infra stocks also have fallen significantly. And if you look at Nasdaq, it's 0.9% negative, S&P 0.5% negative. Dow Jones is very almost flat to slightly negative. Most importantly, VIX have fallen below 18, right? So this is related to AI and tech stocks mostly. VIX have fallen negative. That means the fear is coming down with respect to the war. So despite US market have came down, VIX has also came down. That is positive side. Within that negativity, there is a positiveness. Okay. GIFT Nifty, as I told you, 24,100, 110 level is it trading. So if you take expiries over April, now this is going to be May. So you can assume around 100 minimum premium. Though we are not looking for a bigger up move, and if there is an expectation of bigger up move, more will be the premium. But minimum, when you have 20-25 days of trading session, we can give a 100-point premium. If that's the case, it will be flat. I've already discussed that. So flat to flat opening, maybe 20-point gap down, 20-point gap up. That could be the scenario. If you look at ADRs, ADRs are close negative. If you see, ADRs are more negative than the Indian market. So that is again indicating the fresh weakness about the Indian market. It's actually a signal. ADR will give you the signal what we can expect in our market. So if you see Infosys ADR is slightly negative, Wipro ADR is again slightly negative. If you look at IT is neutral to slightly negative, but banks are some more, showing more weakness. That is because of the RBI rule, and that will have a big impact on the banks. See, the new framework, that is ECL, right? Expected credit loss. So the earlier system that followed us, there will be provisions only after a loan becomes bad, right? The repayment is halted. In that scenarios only, the loan become bad and then the loan become NPA, right? So there will be different classification of assets. So here, earlier the provisions only after the loan become bad, but now the new rule is the provisions will be before loans turns bad. So the banks have to do the risk assessment. So if you feel as per your risk assessment that this loan can become a bad loan or can turn into NPA, then it will be applicable. Meaning is this is like a forward-looking provisioning. right? Technical, but what you need to know is it is not good for banks. Right, you don't want to know what is this rule and how is it going to affect the bank's profitability and all. Definitely, it is not good for bank. It is going to affect the profitability of bank, and that's negative for the banking sector. So that's what you need to understand as a trader, not the other technical things. But those who are looking some more knowledge academic wise, that's why I've explained this. So the impact is the profitability will be affected. That is the only thing that you need to know. Whether any rule is going to affect the profitability of the bank, then what will happen? Investors won't be attracted to that. What will happen? Investors will sell that. What can happen? It will come down, right? Not only one specific bank, it is for all. So Bank Nifty as such is looking very weak. So PSU banks are of course more vulnerable, and you will be seeing PSU banks will fall more than private banks. Now coming to institutional data, yesterday FII sold again, continuous selling 2,000 crore. DIIs bought 1,700 crore. DIIs are supporting, FIIs are continuously selling. If you look at open interest, it was expiry, monthly expiry. So futures OI, it is 25% negative. That's the expiry impact. Call options 49% unwound or expired, 50%. Puts also 50% unwound or expired. You see such huge number. That is mainly because of expiry, and that's monthly expiry. Now PCR is around 0.98, which means it's flat, which means neither bullish nor bearish, we can say. Participant wise also, if you see, the retailers are 31.4% bullish, FIIs are 21.8% bearish, prop traders are 7.6% bearish. So it's a classic scenario that we used to see, right? Similarly, in futures also, clients are long, prop traders are long, FIIs are very heavily short. So smart money is strongly turning bearish. Retailers are bullish. Retailers are buying. Now, apart from that, technical aspect I've discussed yesterday already. Nifty opened 40-point gap down and then went till 24,180 level and then closed below 24,000, 24,990 something. So the pattern is like a small bearish candle. Upper shadow is there. Any up move is getting sold at that 24,200 level, which is a very important resistance. Good thing is that it's above 200 DMA, which is positive. RSI is around 50, though it is still below reference line, but that's like a consolidation signal it is giving. So 24,000 and 23,800 is the major support. If you get it at that level, it is good. That's what I mean by the levels. 24,000 is the major resistance level. So there is no need to take unnecessary random trades rather than, follow that 23,800 as a major. So if you don't get it, don't buy, right? Don't chase the breakout. So if you are someone who want to take less risk, 23,800, 24,200. If you don't get it there, don't sell. Simple as it is. You will get it once. That time you will sell. Looking at that weakness in the market, looking at that particular day's market scenario, right? Again, Bank Nifty, if you see 400-point gap down and then made a high of 56,140 and closed at 55,400. It broke that 55,500 also. Bearish candle. Upper shadows there. It's below short-term moving averages and previous week low. And one thing is that banks are more weak today, but we cannot trade Bank Nifty this week because it's the first week of the month. Last 2 weeks is what we trade because of the high premium. So you need to pay high premium. So though it is weak, we may not be able to capitalize on that. Rather, we will have to look at Sensex today because it's Wednesday. Tomorrow is Thursday. So tomorrow is Sensex expiry. So we'll look at Sensex today. That's how we do Monday, Tuesday, Nifty, Thursday, Wednesday, Thursday, Sensex. If it's a last week of a month, we completely trade Bank Nifty. That's how we normally do. Again, if you look at options, call option maximum at 24,500, 24,200, even 24,000. That's the straddle people. Put side also 23,800 and 24,000, which is again straddle. So 24,000 guys are straddles. They are expecting a range of 250 on the upside, 250 on the downside. Then to be on a safer side, people are there at 24,200, 23,800, 23,500 put and 24,500 put also. So these are different range depending upon your risk appetite. You will be positioning. I have positions, I spread my positions like across these strike price and then I keep adjusting also. So 24,000 is now a very decisive zone. If it is staying above 24,000, it can go till 24,200. And if that grows, then we will see 24,500 level. So geopolitical tension is still there, deadlocks, but talks are still alive. That is positive. Oil is above 110. That is the biggest risk. The reason also I have discussed. Positive within that also I have discussed. US market is weak. The reason I have discussed. RBI rule, that is negative for banks that I have discussed. FIIs is strongly bearish. Keep all these in mind and trade responsibly. That's more important. Even if you don't trade, it's okay. But when you trade, you have to trade responsibly, watch your levels, respect your levels, and respect your stop loss. And if you would like to learn this, if you would like to trade with us, with discipline, with the proper setup and everything, the system that we follow, you can join our mentoring program. It's a live market session. So I see you there.